4-week win streak for the PSEi. Will there be a fifth? Meanwhile, the S&P 500 suffered its worst weekly loss since April. Does this have anything to do with Trump and his economics? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. Some good news for the Philippine economy as the ASEAN Macroeconomic Research Office, or AMRO, projects Philippine GDP growth rate at 6.1% this year, slightly lower than the 6.3% in the April report. But despite the downgrade, this is still faster than the 5.5% GDP growth in 2023 and within the government's 6 to 7% target for this year. And, it's still enough to make us the second fastest growing economy in the region next to Vietnam. Now, in a week with not much economic activity, perhaps this was the only catalyst the market needed, as the local markets capped another week of gains, racing to our next critical zone at 6,800. So far, we've hit 4 key areas of resistance every week. A consolidation ensues, and then a rally, a consolidation, and a rally towards the later part of the week. How strong is 6,800 here? Look at the previous bounces off of this level. If this was a strong support before, we could assume that the markets will face the same intensity on the role reversal, because look at how the PSEi closed below this resistance band here, failing to close within or above this level. We also have to consider the confluence of this trendline resistance. But as market momentum remains strong coming into this week, again, 2 things can happen: consolidate or pull back. But in this case, pullbacks at this point will most likely be met with buy demand. Now, let's look at the drivers for the index last week. Looking at the stock heat map, almost the same stocks continue their rally from last week. Real estate stocks still the strongest sector. SMPH, Ali, and even RLC joining the party with a 6.84% weekly performance. Let's look at the index movers to give us a clue on the market's potential for this week. SM consolidating here in a range, but it looks like it's headed to 933 along the 0.618 fib. AC, in contrast, still struggling to break 600, but after the SM rally, could AC follow suit? So it will have a soft resistance here at 608, but we're really looking at the 629 target range. Now, we looked at AEV last week. It is still hovering along that area. JGS hovering along this area, but look at the positive divergence happening here. The oscillators are forming higher highs in contrast to the lower lows on the price action. So it could be signs of things to come for JGS and AEV. Now, Ali, very strong candle. There was a gap up, a buy the dip opportunity, and it's now back into this resistance zone. It is still short though for the gap fill at 32.05. If this breaks out of here, 35 would be our next zone to watch out for. But the breakout here could be met with a pullback before we possibly rally to 35. SMPH looks poised for 31.50, but unfortunately it closed right below the 200 EMA. A close at 30.65 would have sealed the deal for SMPH. Let's see what happens this week. BDO right smack into the 149.6 resistance, and it looks like a strong resistance, so it could consolidate again, similar to what happened here. BPI also encountering strong resistance. It was not able to close above this resistance band, so both BDO and BPI could consolidate or could pull back this week. On the other hand, markets may rotate to Metrobank for it to reach 72.15, where it last peaked in May, although the 70 pesos is a psychological resistance level. Remember that it's important where the candles close. If it forms a wick, similar to what happens here and similar to what happened to some of the previous stocks we've looked at, it means that there's a strong rejection at those levels, similar to what happened here, and a consolidation or a pullback could be the next price action. So let's move on to ICT, the second heaviest component for the index. After consolidating here, it could continue its rally to 390. Let's see what happens to ICT this week. JFC forming a higher low, but it was unable to close above 231 here along the 100-day EMA. The next resistance would be the 200 EMA, 236, and eventually 240. Let's see what happens for JFC this week. Monde tested its 940 support again, but closing the week at 957. If it breaks down this level, it could mean a downtrend already for Monde, and the next level of support would be at 890 or 880. Look at how the price action simply went through this, so there's really nothing stopping Monde from going down this low. So for me, I would cut loss at this level if it does break down 940. So most of the index consolidating, encountering some key areas, so we could get mixed reactions, some breaking out, some consolidating, and so I'm leaning towards the index probably consolidating along 6,800 for a while. Actually, the best case scenario here is for the index to pull back to 6,650 so that it gets buyers in and help it break through the 6,800 level. Now, last week, people were asking how to look for financials and information on stocks using TradingView, as I've shown when I did a comparison of the conglomerate. So all you have to do is click on the stock. There's a panel here that you can expand, and you can see all the key stats, the earnings, the dividends, the financials, the performance, and right, so you can just click on more info, and you can see the earnings report. You can see the revenue breakdown for each of the companies. You can see the overview, what the company is about, the statements, quarter-on-quarter growth, annual growth. You can see some key statistics. You can see its dividend payout history, and you can see where the revenue breakdown happens. See, if we look at Ali here, we can see that most of its revenue is coming from the property development, so the condo units. Second only are the shopping centers. SMPH, on the other hand, if we click on SMPH here, we can see its revenue breakdown. Most of its revenues coming from the mall segments instead of the residential segment, which is the condo units. So it might explain why Ali is outperforming SMPH last week, because a cut in interest rates could improve condo buying but may not have that much of an impact on mall goers. So I suggest you go through some of your favorite stocks and see their financials and what the earnings are all about. Make rational decisions, combine this with some technicals, and see how you can position yourselves on your favorite stocks. Okay, so on to the global markets. Of course, the news that trumped the headlines last week, pun intended, was the assassination attempt on the former president, grazing his right ear, propelling his candidacy to almost sure win status. I guess sure win status for the November elections. Now, did the markets react positively to this? Yeah, maybe initially yes. The S&P 500 reached another all-time high, closing at 5,673 before a slew of Trump interviews caused the markets to react negatively, pulling back almost to this key distribution area at 5,500. The S&P 500 was already hovering along the 20-day EMA at 5,560, but closed below the moving average support. The next area of support will be 5,430 if the index will not be able to hold the 5,500 level. So what may have caused this pullback? Maybe the markets needed it already. The last pullback we had was back in May for a 1.78% pullback, and before that, a 5% correction. So far, we pulled back 2.7%. A 5% correction would put us right here at the 61.8 fib at 5,350. So these levels do make sense, and we are currently here at the 0.32 fib. But remember, we are still in a bull market. This pullback into the support band could be where the market find some buy demand for this week. Most likely, we will continue to have earnings and the news drive the markets for the coming weeks. Like we saw earlier last week, banks continue the earnings season with great numbers from JP Morgan as well as Morgan Stanley to push the S&P 500 to new highs. But a tech sell-off sparked a rotation into the other sectors. The Nasdaq was hit the hardest with a 4.6 correction last week, with the Dow Jones rallying despite the S&P 500 pullback last Wednesday. What happened in between? Potential Trump policies, if he becomes president, caused some heavy rotation in the markets. First, Trump signaled tougher restrictions on chip exports to China, while quipping that Taiwan should pay the US to defend them, causing Taiwan semiconductor stock to plummet 13% last week. And along with this, the whole semiconductor sector, including stocks like Qualcomm, Broadcom, AMD, Supermicro, and Nvidia, as a potential chip export ban to China will definitely hurt their bottom line. Now, in his potential second term, he's been vocal about imposing heavy tariffs on imports from China. And as we mentioned in previous episodes, tariffs are usually inflationary and could spike inflation back up for the US. Then on the issue of the Fed and Fed Chair Jerome Powell, he's calling for lesser powers for the Fed while stating that he would consider keeping Jay Powell until the end of his term, especially if he thinks that Jay Powell is doing the right thing being that he doesn't cut rates before the November elections. On immigration, his stand on deporting Mexicans may not have also sat well with the markets, as this could potentially lead to inflation as the economy may lose access to, cheap labor. So despite that, the September rate cut probabilities has further climbed up to 92.6% off the back of a cooling labor market as jobless claims hit its highest level since August. But between now and September though, we still have a lot of economic numbers to watch out for, starting with this week's anticipation of the core PSEi numbers this Friday. After this, remember, we still have a month and a half worth of economic data to reinforce whether rate cuts will actually happen in September. And we will go through all of the important indicators again, like unemployment rate, inflation rate, GDP growth rate, home sales, retail sales. But until then, earnings will continue to sway the markets this week. Tesla and Alphabet reporting early this week. They will most likely set the tone for the markets, as their implied volatility could reach up to plus or minus 9 or 7%. And these are really big moves for companies their size. And we will get a glimpse of consumer spending after Visa reports on Tuesday as well. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week.